Well, good morning, everyone. Welcome back to our trading room, the start of another trading week. Hold on one second here while I get you my monitor. There we go. All right, so we just had the opening bell. I was watching the market here uh, fall off a little bit in the pre-market. I didn't want to take any trades without you, but we had a very nice soft edge bounce here on the Eagle. You can ignore this little bit of a gap here. This isn't really a gap. I have my data set to a 24/5 period instead of a 24/7. So this little gap that you see right here is actually from the Sunday morning, um, or the late night Sunday morning stuff. But it does look like we are in a bear market today, and we'll have to wait a little bit, I think, for another selling opportunity. Or at least in the NASDAQ. We'll take a look here at crude oil and soybeans in just a moment. So here are soybeans. This is soybeans on the Falcon, and you can see we've also got a nice little progression lower. A late filter entry, again, just pre-market, a few minutes before the market opened. Friday, the soybean market made a little bit of a rally, and now it looks like they're trying to give some of that back. You do have a chance here for a second push on this entry. And with that second push, what we would be doing is we would be looking to sell it here below the low and try to pick up on the renewed momentum lower. So that is a possible play in soybeans, but like I said, it's still very early. We'll just put that on the shelf for now. Crude oil being a little quirky this morning, working on a possible trend change signal to the upside. You can see the overnight in crude has been fairly bearish also. So we'll see if that doesn't develop into a buying opportunity. The hard edge on crude, on our Eagle, I was going to show you here is 59.50, but I'll show it to you so you don't have to take my word for it. So you can see the hard edge, 59.51 to be precise. So we'll see whether that develops into something tradable also. Okay, soybeans, once again, working on a trend change now. So we can clear this off. This is, again, it's first thing Monday morning, right? So you need to let the dust settle a little bit, at least for the first 5 minutes, so we can see what's going on. here's a trade in the Raptor. Now, they broke just as I was about to take a look at doing this trade. That's all right. There we go. I feel a little better about letting this one break. There we go. Now I know the limit of this market. I feel better about that. My concern was that the market had come down all this way. All of a sudden they put on the brakes. What happened to that momentum? So I'm okay seeing the buyers tip their hand. Show me where the buyers are. This is still not the best looking of trades, just so you know. If you're trying to follow along on a trade this morning, this is one that maybe you want to throw a onesie on. We might see a better opportunity here in a few minutes. But the way it sits right now, it could go, but given that the market has stopped this overnight decline, I'm thinking we might see a little bit of a rally here first. So I'll just leave that order parked there for the moment. Actually, you know what? I'm going to scrap the order because this could easily turn into a double pullback, at which time it would be a little bit easier to sell. Joe is asking, what month should we be on for the euro and the other currencies? I believe the roll was last week, so you should be looking at September. I'm just double checking. Yes, the roll was June 15, so you should be into the September contract for your currencies. All right, here comes the soybean market once again. And we're getting a little bit of a conflict here. The eagle still looking bearish. And notice how our daybreak lines are starting to get a little bit close here. I've already got soybeans dialed down to our alternate settings of 446, so I'm not going to adjust it any further. But this just tells you how quiet the market might be getting. And look at our NASDAQ. It's a bit of a jumbled mess also. We have a hard edge bounce now on the Raptor, a first micro macro cross buy in the Hawk, and a possible trend change signal building here in the Falcon. Now this is technically a counter trend move, so I'm not going to get too excited about this. This is the type of thing where if you're going to take it, you should probably cover it deep. Because we are in a downtrend here. There's no question about it. It's too early to tell whether there's going to be a change in trend. So you want to be extra careful on the entry. You want to be extra careful where you place your stops. Come on. There we go. Just try to squeeze a little bit more out of this. Now we've also got a trend change signal here in the Falcon, which mirrors what we're seeing on the Hawk. The entry signal actually came right here. We could do a second push on this one also. Same idea. I think we're going to want to cover it deep because it is counter trend. There's no way to tell whether or not this is nothing more than a bear flag at the moment. I do not suspect that it is a full-out reversal, at least not yet. Looks like our target is going to be this 44.15 area, which is our hard edge. And we do have some room to get there, both on the Hawk and the Falcon. Okay, and now soybeans teeing up for a possible sell. And what I'm going to do, because soybeans have been a little bit quiet, is I'm going to look to take it just on the other side of the ATR line. In other words, if this bar finishes lower, I'm going to let that be the bar that brings me in. Okay, here's the big crunch time now. The Eagle flashing a sell signal. It's against the ATR. The Hawk and the Falcon, of course, both a little bit bullish. This is why I really dislike counter trend trades. Because the trend is down, ideally I should be looking to sell, but I'm already long, so I've got my fingers crossed. Okay, reasonable effort here now on the part of the buyers. I do need to see them print this bar higher so that I know they're truly interested in rallying the market at this point, at which time I can start to bring up my stops. Had I gotten the entry where I wanted, I would have got my first profit target, which is a little bit annoying that they didn't give me my entry where I wanted to get my entry. Oh, come on. Yeah, so you see now, this is the problem we have. We're getting sell signals. Where are those buyers? Come on, buyers. Oh, good old counter trend trades. Well, I know where the buyers are. They're right down here. Of course, now I'm getting a first micro macro cross lower. All right, time to press. So essentially what I'm doing is I'm forcing the buyer's hand now. If they fail and the market has lower here, well then it's very unlikely they're going to continue to rally the market. It looks like I'm going to get hit here in just a moment. Same thing now on the Falcon. And maybe it's a touch tight, but all right. We'll see now whether or not that was a good plan or not. I'm going to put a note in the journal. Okay. And we've got a sell signal here now on the, this is our trend change signal. So they failed to the upside. We'll see now whether they follow through to the downside. We've got a double pullback here, and we have a with trend signal here, and I'll just hit the market order because I don't have enough time to set it up. All right, you guys, so we tried them to the upside. They didn't cooperate. We'll try them now to the short side and see whether there's some follow through there. I didn't get a chance to reverse on the hawk trade, but you can see that we had our first micro macro cross, our macro pullback. This is also a trade I would have reversed on, and you can see the problem that we were having. First micro macro cross, unfortunately I didn't get the fill where I wanted to get the fill. If I did, it would have hit our profit target. I do try to take the fills on the hash mark in a counter trend situation because, well, this morning was evidence of the problems that can originate if you don't get that fill is the market won't get to your profit target. Well, and actually I doubled that profit objective, didn't I? So that didn't help matters any. Okay, soybeans still hemming and hawing. Haven't committed yet. The bar has flipped over the ATR, so I'm looking to enter below the low of this bar right here. Now that everything is in sync. But they're very reluctant. Our Geiger counter is starting to tail off a little bit. Come on, sellers. Come on. Don't be like that. See, we're getting the retest thing going on now. Right, so we've broken through. Now we're getting the retest before the next move lower, if in fact there will be another move lower. This is a very important thing that's going on in the marketplace right now, this whole retest thing. If we see the sellers hold them off here, actually I'll leave that line up for you. Then it could make for a good place to add to our position, or they're going to stop us out. Oh, come on now. Play nice. No. Okay, well, not a bad trade. They did hit our break even. We'll see now whether they come out of here and generate another sell signal. I should probably throw a trend line or two on here. So it looks like there's a very, very shallow trend line right there. A slightly steeper trend line right here. And it looks like there's something resembling a trend line right there. I know sometimes these lines get very confusing, don't they? Eliminate that very shallow one. That one's not going to matter, not today. And these will be the ones from up here. This little channel that held the market. Then we had that big breakout out of the open. So we'll give it just to the other side of this trend line to behave. Otherwise, it may start to look like the market is getting a little bit shallow here and perhaps even a little bit stronger. Michelle is asking, Eric, do you double your profit targets for soybeans because of its tick size, because it's 1250 a tick? Not so much the tick size, Michelle, but the follow through that soybeans normally makes. It's like a market like crude oil or even the Russell. If you go with the high probability target, you're practically guaranteed to get it. But because soybeans tends to make very pronounced moves, here's soybeans on the Eagle, the trade that we're looking at. You know, even a small day on soybeans, if I go back here to this move right here, you know, and this was, you would have had to hold through the close into the evening session a little bit, but even so, nice steady progression. But technically, our high probability target, because it's 1250 a tick, is only 16 ticks, which I'll show you here in a moment. Should be relatively easy for soybeans to pick up. When in doubt, always go with your high probability targets. But as you trade a market a little bit more often, you're going to notice certain tendencies, personalities, if you will. All right, a few interesting things going on here. We're getting now this green bar sell, and look at where it's happening, right there. So this is that reaction. The green bar sell, you've got the option of taking this with trend. We missed the with trend opportunity, so I'll set up to take it counter trend. And because it's a counter trend trade, I can be a little bit more aggressive on my stop, because if the market reverses higher from here, we're going to see this test of the extreme, right? We're going to see this, we're going to see it fail, and then there will be a pretty good chance that it's going to rally from here. So that's why I have that set up as a failure of the green bar sell. Now, if it truly is reversing here, we should get a first micro macro cross to the upside. So that's why I tell you, you don't need to be too anxious to take red bar buys and green bar sells. Oh, very important bar here. Very important. You see the struggle that's going on between the buyers and the sellers? I'm tempted when it's flashing me $40 or $50 just to punch out of it. All right, well, we're just about to get spanked on the reversal here. And we have a reversal signal Now on the Falcon also, this is our trend change signal. So the market, yikes, a lot undecided this morning. I'm not liking the conflict in signals between the Eagle and the other tools. Not liking it one bit. This is kind of a continuation of Friday, where they were very uncommitted. All right. I'm going to close the Eagle trade rather than get stopped, and I'm taking a bit of a gamble here now that, in fact, this is a bit of a reversal going on, and we're going to see a retreat to the hard edge. Okay, our Hawk just hit the break-even trigger. Come on, Hawk, get up there now. Get up there. Okay, so we managed profitable trade on the Hawk to the upside. And I think I can probably get a little bit more aggressive here with my stops. Okay, get up there, come on. Oh, don't you dare. Give it a little nudge. Come on, little push. Get up there. See, once again, had I gotten my entry on the hash mark as I wanted, we would have hit our profit target already. Michael must be a golfer. Mike's asking, did you get to use your new golf clubs on the weekend? Yes, I did. Thanks for asking. I hit some very fine shots. I was quite pleased. In fact, I'm planning on going out today again. I've got a few things to do first, but I'm sure I'll be able to sneak in around before the end of the day. That's the plan anyway. So we're getting conflicting signals now in crude oil also. So here we have a green bar sell on crude. It's against the ATR, but still it's a green bar sell. We know that's a high probability signal. And we are getting a macro pullback signal in the Hawk, which is also a high probability signal. So which one is it? Well, the trend is down at the moment, so perhaps I will give preference let me see here if can I risk it to there? All right, well, there is a room for a little hit and run in here. on the macro pullback. And once again, it's the kind of thing you got to be careful. If it was just our $50 target, we'll get that no problem. You see, it's right there. We just flashed $50. Come on, get up there. Give me 60, because that would fill our $50 profit target. Yes, Michelle is asking, what about that green bar sell on the Eagle? Yeah, that's what I was pointing out, Michelle, is we're getting a change in signals here on the, here's crude oil on the Eagle. It's a green bar sell. It's currently against the ATR, so I would not have engaged it just yet. I would wait for the bar to change over the ATR and then look at shorting it. But yes, it's a valid signal. I took the hawk signal because the hawk signal tripped first. The eagle signal had not tripped yet. So here's the hawk signal. And it flashed $50. There's 40. Come on. Oh, give it a little bit of a push again. We know that $50 is our high probability target. We actually need it to trade to 60 to get filled. There's 50. Oh, come on. There's 50. Well, depending where you are, oh, I saw 60 there. So depending where your high probability target will have been filled. So now we're holding out for a little bit extra. But if you were just doing for the high probability target, you would have managed to pick up your $50 per contract. In fact, I should probably just roll it down here. I shouldn't give crude oil too much room. And with our Falcon, you see we're also getting a bit of a conflict where it's in a downtrend. We're working on a possible trend change signal to the upside. If this bar turns green, we will have a late filter entry signal to buy, and that will pretty much guarantee that the market will head higher. Oh, wow. Thanks, Jim. Jim says, good morning, Eric. The advanced decline is terribly lopsided to the downside. We've got only 600 positive, 2,200 negative. That's huge, a negative 1,600. Now, remember, if you're watching something like the advanced decline, it is a relative number. It's not always an absolute. That does, of course, imply a lot of selling, but how many more sellers can they find from there? We may actually start to see the market get stronger as the selling dries up. We'll see if that is in fact the case or not. Richard is asking, Eric, if trading 3 targets and the first is 16 ticks and the third is trailing, where do you recommend the second target be placed? Good question, Richard. What I would probably do is I would go to the day ranger and see what the average daily range is and use that as a guide. So here on the NQ, it looks like our average range is around 160 ticks. So let's say you wanted to conservatively take a 20% of the daily range, which would not be that much really. I'd be looking then at a 30, 32 tick target. I think that would be a pretty good way to do it. If you don't have the day ranger, you can guesstimate by looking at the swings, looking at the legs, and say, okay, this leg went from 44.35 down to, say, 44.95. Oh, sorry, 43.95. What did I say the top one was? 44.35. 43.95, that's what? That's 40 ticks. Or pardon me, 40 points. 80 ticks in the NASDAQ. So you could take, again, you could use that as a gauge and say, okay, I want to take 50% of a move like that. So you could set your second target at 40 ticks. It's nice when you're setting your second target, like we have our high probability targets that you hear me refer to. It's nice if you can set your second target by the market's activity. You know, if you have a market that's very quiet, well, then you'd be a little bit more conservative. And if you have a market that's very active, you can be a little bit more liberal. Okay, so here we are into the hard edge. The Raptor is bouncing on the underside of this channel that was formed way back here. So we have this massive overshoot. Now they're testing the underside here. And not to get too confusing with too many lines on here, but I'm going to throw that one down there. I guess I can eliminate that one because that one's no longer a factor. Okay, crude oil finally managed to rally enough to find our profit objective here on the hawk trade. So that macro pullback signal worked out for us. Hooray. And they seem to be going awfully sideways, don't they? Lots of yellow bars. Yeah, could be right, Jim. Jim says too many worries about Greece, and ain't that the truth? What a mess. What a mess. Of course, after the Second World War, Germany went bankrupt. I don't know if Japan ever went bankrupt or not, but it's not a good thing. In my lifetime, I've never, or at least not to my recollection, seen a country on the verge of bankruptcy. I've heard about it, I've read about it, but I've never seen it actually happen. Hopefully, this won't be the first time. Yeah, like Jim says, very weak market. All those gains lost from last week. You can see our tools all giving us mixed signals still, which is making it for a rather difficult morning. The big move came early, right out of the gate, big sell. But now the eagle, still bearish, still flashing or working on a green bar sell. The hawk and the falcon, well, the falcon a little bit more bullish than the hawk. Spoke too soon. Now we're working on an early trend change signal or even a double dot sell, depending how aggressive you want to be on this. Here, this is an early trend change signal. It developed rather quickly. There was no chance really to get into this one. You could look at doing the second push on it or just waiting for the proper trend change signal. We do have our green bar sell now on the eagle. Ay, 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 ay. So this is one of these situations I touched on last week about trading quotas, not trading too often. How the biggest problem I see with traders that ask me for help, almost without exception, they overtrade. You know, we're in a trading room here. I can show you some things, but honestly, none of these trades have been especially inviting. The signals out of the open, those were the only ones that seemed to have any strength to them. And now the rest of the time we're just flip-flopping like a fish. All right, here comes a raptor signal. Now this is our first with trend signal. Well, technically it came back here, I suppose. But we did have a test here of the extreme, a failure. By failure, I mean it's heading higher. checking out the top end of this trading range, challenging these highs. I suppose I could have waited till it broke out above that high. That would have been a little bit safer. So if you're looking for a trade to take it above this high. That should have a little bit more follow through. I was looking to hopefully catch it here on the hash mark. I slipped a couple of ticks. Nice thing about this trade is if we trade back below this low, we're definitely on the wrong side of this trade, no question. Here come the sellers. All right, buyers. If the buyers press now, then I'll know the buyers have control of the market because the sellers tipped their hand right here on these highs. Come on, get up there. You know you want to. Yeah, Michael says this also looks like a second pullback into the hard edge on the Raptor. I don't like that they failed on this high, and I don't like that the buyers haven't come back yet. That's not good. Oh, Jim, you have no confidence in me. He says a test of the 10 a.m. low is coming. That's right down here. Oh, get up there, you buyers. You sons of buyers, get up there. All right, so here's our eagle signal. It has not changed the ATR. You see how the ATR is still against us? This bar, however, will flip the ATR over, so I can look to enter below the low of that bar. See how the ATR has changed over now? Oops, not yet. One more bar. The ATR hasn't flipped yet, so this bar right here will change the ATR over. And the way the market is this morning, I think that just deserves a onesie. Okay, I think our Raptor trade got tagged. Yes, it did. Just far too much sideways action. Ay, ay, ay. Here on the hawk, you can see our filter keeps breaking up. A lot of yellow bars through here. It is the first micro macro cross lower. You know, it is a high probability signal, but Really, I'd have to risk it all the way up there. Not that that's a bad thing. Maybe what I would do instead is put a onesie on it, risk it up here, and see if I can add to the position if the market continues. And it keeps retreating, and now it's into yellow bars. Oh man, they're just brutal this morning. Yeah, here they come. Let's see, how deep do you have to cover the stops today to hang into this market? So even if you had covered below here, they still would have smacked you. You need very generous stops for a market like today. Just trying to get a handle on who owns the market at the moment. Michelle is asking, Eric, on the Eagle, what would be the highest probability signal? Well, a very high probability signal on the Eagle tends to be, well, there's a couple really. Your green bar sell in a downtrend is a very high probability signal. Those are one of those signals that I will take almost without exception, even though the one we're in this morning is certainly struggling at the moment. The inverse of that would be the red bar buy. Another very high probability signal with the Eagle is the trend change signal. So when the market first changes the band over and you get that initial buy or sell signal, ideally it should be followed or preceded by a test of the extreme. And you can anticipate that it will have a reasonable amount of follow through to it. See here the red bar buys, very good follow through on them, red bar buys. And here's the first signal with trend. This one would have been difficult for me to take because we hadn't seen a test of the extreme yet. It's not to say I wouldn't have taken it, it's just if my signal is here, my stop would have to be, well, as deep as I could afford. If I could afford it down here, I would take it. Otherwise, at least halfway. Here, once again, you see the green bar sells. The nice thing with the Eagle too is that if you have some structure that you can shoot a trend line and the market is trading off of that trend line, that adds a lot of strength to your red bar buy or green bar sell. Unfortunately, the way the market is this morning, it's very difficult to put any type of trend line on here. But to answer your question, Red bar buys in an uptrend, green bar sells in a downtrend, and the initial trend change signal, especially one that's been preceded by a test of the extreme, all tend to be quality signals in the eagle. The advanced decline to about 1400 now, a negative 1400, which is still fairly bearish, and Jim says that the DAX is looking very weak, so we'll see whether or not we get some follow through off of that. Lots of congestion. Market's obviously waiting for some sort of spark. It's not getting anything right now, so they're just flip-flopping. Sweating our short trade here, trusting the eagle that it's going to come through to the downside. Jim says there's some buy blocks going through on the YM. Of course, it's not always clear whether those are orders exiting or if those are orders going in anticipation of a rally. Oh, great. The chop fest continues. Okay, come on, sellers. Give me that first micro macro cross now. Come on. So what they've done is they've broken through here. Oh, don't you dare. Come on, give me that reaction. There we go. So I can anticipate the signal. And I'm anticipating the reaction. Waiting for that trend change signal now on the Falcon also. Jim says, don't do it, I'm long. Wise guy. Yeah, some days you just feel like fading your signals. Craig asked an interesting question. Craig asked, Eric, is there a tick size that would represent an hourly or daily time frame? If so, what would that be? You're referring to the mean Renko bars, Craig, instead of a regular tick bar? I just want to double check before I give you my thoughts on that. Yes, okay. So is there a mean Renko bar that would approximate a daily or hourly chart? Yes, the problem is that it keeps changing. That's the thing with range bars. If the market is not making much of a range on a particular day, you're not going to be able to represent that whole day. So for instance, if today turns out, this will make more sense once I get a daily chart up here. 1 second. All right, so here's a daily chart for the NQ. And you can see that you can ballpark what an average daily range is by looking at some of these bars here. And you'd be able to approximate a tick size from that. And it looks like for the most part, a lot of the bars will be that size, and you would go from the tip to the tail. The problem is when you get a little itty bitty bar like this guy right here. When you get a bar like this, or a bar like this, that messes up your parameters. Or bars like this. They're going to mess up your what your average daily size would be. But it looks like if you just measured a few of these bars, so that one has a high 45.39, a low of 44.92. There's my calculator. So that's a 47 tick bar from tip to tail. This one is 45.31 to 44.80. That's about the same, isn't it? It's about 50 ticks, 51 ticks. So it looks like maybe a 50 tick, or pardon me, that's 50 points. That would be 100 ticks because there's 20 ticks per point, or 4 ticks per point. Boy, I'm stumbling over my lips this morning. So I'm thinking somewhere around 100 tick brick would be a daily, and then if you wanted to see the hourly, you would do the same thing. You would look at your hourly chart and you would try to find the average size bar. Looks like this green one here is pretty close to the average. 44.80 to 44.65, so there's 25 points through there, or 100 ticks. This one looks average as well. 44.58 to 44.40, so that one's around 18, so maybe somewhere around 20 ticks would be a good representation of the hourly. 44.53 to 44.42, that one's only 11. You can always run a time chart in parallel to your DTS. You know, if you're curious where the market is on the hourly, there's nothing wrong with, you know, building a time chart and throwing a little time chart in the corner so you can get an idea where the market's at. If you find that helpful, remember that's always the key. If this helps you make a decision, then by all means go with it. If it doesn't, well then you got to get rid of it. Craig asks, okay, it really doesn't work for mean wrinkle bars. Well, like I said, it's going to change based on the size. The mean wrinkle bars have been set up to be used as a day trading system, but let's just throw a 100 tick bar here on the Eagle. I haven't really put a lot of research into this particular one, Craig, so it's kind of hard for me to say. Okay, it looks like the way the daybreak lines are falling, 100 ticks might be pretty close. Let me get rid of those daybreak lines for the moment. So that would be a daily Eagle. You can see that the DTS system, it still provides signals regardless. We did generate a green bar sell here. We don't have enough bars in here, but if I loaded more bars, I'm sure we would find more signals. It does allow us to draw our trend line a little better though, doesn't it? Well, everything's just dried up. Jim says the Russell and the bank index making new highs. We'll see. We'll see whether that trickles over here. For the most part, though, we're still within the, here's this morning's range. And we're trading right smack dab in the middle of it. I suppose, you know, this would be as good a trade as any. Buy the high, sell the swing low. We know there's obvious support here and obvious resistance up here. And just let them churn about until they can get outside of there. That really might as well be as good a plan as any. Where are we on our support and resistance lines? Yeah, see, we skewered the market right through here. Normally it will drift to one of the lines, but we can't even get that going on. We can do the same thing here with our OCO order. Remember, when you use your OCO orders, you right-click on the chart. And again, you right-click. And just like the Raptor, these are live the moment they go on. So I tend to place them away and then scroll them in. The hawk is a dead giveaway though. See all these yellow bars through here? That's funny. Well, it's not funny. Normally we don't see trading like this until August, where you're just kind of pounding your head against the wall trying to get the market to cooperate with you. Another green bar sell signal here on the Eagle. It's starting to look like a lot of serious consolidation. The green bar sell, however, is our high probability signal, not that you would know it from the last one. This is going to be one of these trades where you're going to have to look at running a relatively deep stop, just the way the market has been behaving today. Let's see if they turn around. The advanced decline still very negative, about a negative 1400, Jim says. So I'm not entirely sure why they're holding up, but they are. Maybe they're trying to flush out the last of the buyers. We'll see. Well, you know what? We've got a green bar sell. Don't follow me in on this one, folks. Honestly, trading today is brutal. I'm just going to take it from the hash mark, see if we can get to our high probability target. It's currently against the ATR, so there's every reason to believe that it's going to resist heading lower at this point. Of course, now that I've said all that, watch it fall off of the map. Ho hum. Yeah. This is the fun part of trading. If you are looking for a trade to do, I would not be opposed to the bracket scenario that we're looking at here, where we've identified the significant support and resistance this morning, avoiding the market until it gets outside of that range. This might be a feasible trade. If you're looking for a trade to take, that is one that I would probably endorse. Apparently, I was just checking my email because there wasn't really anything going on in the markets right now. And apparently some of the videos that have been uploaded have audio problems. So our apologies for that. Trying to isolate what the issue might be. This recording software is fantastic. All this screen sharing software, remarkable, but the technology does have its drawbacks. Even crude oil hasn't done a whole lot since our macro pullback signal generated back here. A little bit of a rally, but nothing too terribly serious. Early trend change signal here in the Falcon. We do have the lower swing high. If you wanted to be more aggressive about this. Oops. Okay, well, we did get the breakout, and it looks like we're finally catching some momentum. So on our Raptor trade here, I'm now going to cancel our sell order because, oh, maybe I won't. Are they tied together? Okay, good. They're not supposed to be tied together, but I seem to remember one time it did something a little quirky where I canceled one order and somehow ended up flattening my whole position. Notice the momentum that we picked up when we finally got above the high here, and how it was just a waste of time really to try to trade this mess. I know it's hard to recognize these areas of congestion, but it's certainly beneficial to be able to pick up when the market lacks any momentum whatsoever. Jim says, take a look at the wicks on a 5-minute chart. Hold on a second here, Jim. I will pull up a 5-minute chart. NQ, 5 minutes. Just having to build one here, one sec. Okay, so here's a 5-minute chart now. Wow, what a mess. Yeah, look at how neutral the market was here. Very pennant-ish. Rejecting the higher prices, rejecting the lower prices, back and forth, back and forth. And then when it finally broke here to the upside, part of the reason it broke as hard as it did was it stopped out all these people who had sold right here, trapped a bunch of traders. Now it looks like we are broke to the upside there. Well, we'll see if we can get anything more out of that. Okay, well, not a bad little trade there. We were able to take profit on one of our positions, tried to trail the other one, unfortunately got tagged a little bit better than break even there. Well, Jim says check out the YM. All right, let's take a look at the YM. Oops. So here now is the YM 5-minute chart. Big rejection down here. That would be a big deal. It's also a big deal. This is what we saw, the big fall off this morning, and then the market put on the brakes. Whenever you see a big bar like this, there should be more follow through. Like this bar here does not nearly compare to this bar, but this was a monster bar. There should have been more follow through there. Look at the massive selling that was going on for those first 5 minutes, and then all of a sudden the market put on the brakes. So we kept looking for it to resume the selling. They did a little bit here, and then total rejection. And like the NQ, we got a very tight pennant style formation building. Now it's okay to see a hesitation bar when you get a breakout. That's fine. But when the market takes too long to resume the trend, as it did here, and it started consolidating, well, it could have broken to the downside also, but if we see a lot of sideways consolidation here now, then that totally throws off the buyers on the NQ. Right now, it looks like the buyers have control of the market. But if they can't keep control, like I say, it's okay to have a hesitation bar for 5 or 10 or even 15 minutes, but after that, we need to see the buyers pick it up again. Jim said, I bet that's a 50% retracement. Let's take a look. So shoot a line from here to here. Yep. Okay, I'm going to put that away. So now we're kind of stuck again. Oh, baby. Now we're getting a late filter entry signal. Oh, any other day I would take this without a second thought. But today, I should actually be running a much deeper stop than this. All right, there they go. Okay, well, get up there. Come on, keep going. Well, it's nice to see they actually may have committed to a direction this morning. Did we get a comparable signal on the Raptor? Oh, we did too. We got the soft edge bounce. Okay, well, what do you know? Ooh, Jim says the ticks are up over 1,000. That's huge, folks. That's incredible amount of buying going on at the New York Stock Exchange. It can also lead to a reversal. There are a lot of traders who will, if you're watching an indicator like the ticks, that's TICK, they'll fade it. So if it hits 1,000 ticks or better, they'll sell it, and if it hits a negative 1,000 ticks or better, they will buy it in anticipation of the market going the other way. Wow, that's huge. Jim says positive 1338. I don't know if I've ever seen a trade that high on the ticks. All right, well, we'll hang with it for a few more minutes here. Just to see if we get anything coming of it. This session that we saw here, where the market was just continuing to go sideways, a lot of traders refer to this as barbed wire. And I thought this was a good example, the way the support line skewered the market right in the middle. And it just goes up and down and up and down and up and down. And just like barbed wire can hurt you, it can also hurt you when you're trading. I just remembered that little tidbit, something you can share with your friends and family. Oh, Jim says the Russell's not stopping. The Russell keeps going higher. We'll see whether that has enough on it to drag the NASDAQ higher. Probably will pick up the YM. The NQ can be a creature all its own. All right, you guys, I think we're going to button up shop for the day. If you are trading this afternoon, we're probably going to see the NQ rally a little bit. It looks like they might be getting into that little bit of an opening gap that we saw. I didn't think that was going to be an issue, but perhaps other traders feel otherwise. The rest of the market's also very, very flat right now. Not much going on anywhere really. So be careful, be choosy. We'll see you again tomorrow. We'll talk to you then. Bye for now.